The deadline is fast approaching for filing your 2022 self-assessed tax return with Revenue. But it's not just business owners and the self-employed who need to file. If you are a PAYE worker who earns income outside your normal job, you may also have to file. In this video, I'll give you an overview of who is treated as self-assessed for tax purposes and also some key points to watch out for if you are filing a tax return. A self-assessed tax return is a tax return that you must file if you are considered a chargeable person. Typically, this means that you do not pay all of your tax to the PAYE system. Self-assessment means that you are responsible for calculating how much tax you need to pay on your income, and you are also responsible for paying that tax to Revenue. You are obliged to file a self-assessed return if you are self-employed, a contractor, a subcontractor, or a landlord. You will also need to file if you've received income in addition to PAYE income of more than €5,000 in 2022. If your income is below €5,000, you will still need to pay tax on it, but this is done by having your tax credits reduced, so the tax is collected via payroll on your employment income. But you won't necessarily be classed as having a self-assessment obligation in that situation. There are other reasons you may be classed as a self-assessed taxpayer, which include being a proprietary director of a company with a shareholding in excess of 15%, or if you've exercised share options or incentives in an employee share scheme, or if you've opened a foreign bank account during the year. The official income tax deadline is 31 October. However, this is extended each year to mid-November for taxpayers who file their income tax return and pay their income tax liabilities to the Revenue Online Service, or ROS for short. This is called the ROS Pay and File deadline. For 2023, the ROS Pay and File deadline is Wednesday, 15th November. You must pay preliminary tax for 2023, file your 2022 income tax return and pay any balance of tax due for 2022 on ROS all on or before 15th November. Two things will happen if you file the tax return late. Firstly, Revenue can charge interest of approximately 8% per annum based on the tax liability. The second implication of filing late is that a surcharge applies to increase the late filer's tax liability. The surcharge is 5% of your liability for the first 2 months, and it increases to 10% after 2 months. In addition to submitting the tax return on time, you must pay the balance owing on your tax bill for 2022, plus preliminary tax for 2023, which shall be equal to either 90% of the final liability for 2023, 100% of the final liability for 2022, or 105% of the final liability for 2021. If preliminary tax is underpaid, then Revenue can charge interest on 100% of the final liability, and the interest runs from 31 October of the year in question to the date of payment. So, for example, if you underpay preliminary tax for 2023, the clock for interest starts from 31 October 2023 and runs to the date the full liability is paid. Self-assessment can be complex, and the implications of getting it wrong can add up to a costly, avoidable tax bill. Revenue's website has information to help if you plan to look after your own self-assessment tax return. It's also advisable to consider getting the help of a qualified professional tax advisor. If you need professional tax advice in preparing and filing your self-assessment, don't hesitate to contact me or your usual KPMG contact. Thanks for watching.